Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you on your screen the stocks that will be featured in this recording. As a quick reminder, if there's a particular stock you're interested in, you go directly to it using the chapters feature in this recording. All right, let's take a look at the market. And as you can see, we talked last week about this symmetrical triangle that we were building, and we wanted to figure out if we were going to break above the previous wave 5 high, which was over here. Would we relabel or would this somehow maybe turn back into a 3, etc.? And we just took out the high enough from mid-January to where the 5 moved over here. But you can see kind of a small quiet day today, working on a bit of a quasi-doji as we have just a couple minutes left in the trading session. So we'll see if Monday finds a little bit of resistance here at this previous wave 3 high. That's where I've drawn the line. But we are getting, if we can finish to the upside here, a little bit of a follow through. This not a great follow through day, but yesterday was such a big up day that you would think that we are likely to break above that resistance. And if we do, we move up to this wave 5 high. Notice that it's out a little ways. The start of the tap box is in mid-April. Before we get up towards that 630 level. So if we break 610, we've talked about this, we're likely to go up to that wave 5 high, but we actually have to do it first. And I would submit that having a quieter day today after a big up day yesterday gives us a better chance to break that and hold it. When you break a major point of resistance and you're already overbought or oversold in the case of breaking support, it tends not to hold because just not enough energy left. So you like to have that 10-day moving average right next to the equity price or security price, whatever you're trading, before it breaks a point of resistance. So 51% extension, it's a well-formed pattern. Seems like that's where we're destined to move on the SPY. We did have some economic news that came out this week. The CPI report came out on Wednesday, and that rattled the markets just a little bit with the fact that it was a little hotter than expected. We got that 3 handle back on the inflation number, and so the Fed's talking about how they're in no rush. Really didn't seem to change anything other than we don't want to see that starting to go back up. And I'll talk a little bit more about that when we get to the bond market. But then we also had retail sales that came out this morning, and those were kind of weak. Quite a bit weaker than expected, with a decline, as you can see, of 0.9%, when only I think 2%, 0.2% was expected. So retail off on January. Perhaps the consumer is recovering from the holiday spending spree. We'll see if that's a trend. And the consumer starting to pull back. That's not good economically, especially when we're dealing with a pattern of a little bit higher rates. So let's actually go to the TLT. I did want to show you before we go there where the DMI is on the SPY, because if you're looking for something to be concerned about, as well as the pattern seems to be setting up with a potential upside breakout from that triangle and moving to a new wave 5 high, we're not really getting much confirmation out of the ADX. It's continued to move lower, and we're getting the snaking pattern here. That's what I call it, when the directional indicators go back and forth, just whipsawing back and forth. Even though we went through this consolidation, and you would expect that to bring the ADX down, one of the things that I look for breakout patterns, especially out of these triangles. But as we start to break out, we're going to want to see this ADX turn up. Otherwise, it's going to be suspect to whether or not, if we break above 610, we can hold it. So we need a little bit more help out of the DMI to show strength behind any sort of a break above that 610 level. I've been talking about the bond market, so let's just go right to TLT. When we take a look here, remember TLT is the 20-year, and this is prices. Prices and yields move inversely. So when you see prices going up, that means yields and rates are down. So we had a little bit of a move up today in prices, so back down in yields. You can see what happened on Wednesday where prices went down when that CPI report came out. So we had a little bit of a bounce in yields, but we've turned that around. And if we can stay in this range here, I think that's constructive for the equities market. The question is, are we done with this wave 5? It's right at an 100% extension. I mean, just a beautiful Elliott Wave pattern here on the TNX with the wave 4 just above 50%. That gives you 100% extension. right to the bottom of the tap box, and we've bounced there, logical point to bounce. If that wave 5 is done, then we should start to proceed back up towards the previous 4, at least to the 61.8% level. And again, if we go up in price and yields continue to back off a little bit, that could be constructive, as I said, for the equities market and potentially breaking above that 610 level. You guys ask about TNX. You like to see it, so I'll go ahead and show you the chart there. Remember, this is the opposite. So this is yields on the 10-year, not prices. This is actually rates. And again, just another fantastic Elliott Wave pattern here in the currency bond market arena, where we had this zigzag pattern right here. Basically, a 38.2% B-wave correction gives you a 61.8% target. If you extend down, you go down to the 100%. Usually, you back up to the previous fib level first. So all the rules just followed spot on here on the TNX and that C-wave going to the extended C-wave level at 100%. And then normally what happens when a zigzag ends, especially a corrective one following a wave 5, you retrace the C wave. So you go back to the B. And that's exactly what we did yesterday. So working exactly as you would have thought on the TNX. So we'll see if they calm down since this corrective pattern is completed after wave 5. We'll have to watch and see what happens with yields and rates from here. Taking a quick look at the VIX, not much to talk about here. We're just kind of hanging around in that 15 area, right in between this trading range that I've drawn here, where 70.5 is kind of the upper end, 12.5 is the lower end, and we're just staying in the midpoint here. I call this congestion when you trade through a price level. It's starting to become a bit of support here since early December is the last time we were down around 12.5. So the range is getting tighter. You could argue that that could bode for more of a upward breakout in volatility. If so, that might mean a failed breakout in the SPY above 610. But we still have room at 15. We could drift lower back down to the 12.5 level if we are going to get that upside breakout on the SPY. So the charts are starting to come back into congruency, I'll call it, if you will. When we start to look at the DIA, the patterns don't get discombobulated for too long. You can see that the wave 5 is still over here, so we haven't taken out that wave 5 from December yet on the DIA, but we're right in that area. Nice consolidation here underneath 450. We're staying above the 10-day moving average. We tapped it on the low today, and we'll see if we can break above 450. That 5 will move over. So pretty similar with where we are on the SPY. The SPY might be just a little bit ahead of where we are on the DIA, but not too much. If we move over to the Qs, taking a look there, they're going to need the bond market to be helpful. And the bond market is giving them with that little bit of a break in rates, a little bit of a pause on the movement to the upside in rates. We're moving up here. It seems like the market has digested that we're not going to get a Fed rate cut anytime soon. It's being pushed down in the Fed fund futures to December. The likely was going to be in the second half of the year, but now it's moving towards the end of the year. But still, the Qs have been able to find a bid with just a little bit of a reprieve from rates. And you can see that we are confirming this breakout of its own symmetrical triangle here. So we had this descending triangle. We morphed into a symmetrical triangle here. A lot of consolidation trying to figure out where we go from here on the Qs, and we're about to break this level. Now, slightly different pattern here because the wave 4 is not purple. You can see it's still green. It means that's still the active wave. It's not confirmed yet that the wave 4 is complete. It may take taking out this wave 3 before it does that. Sometimes the algorithm is confident prior to that, and it turns it into a confirmed wave. So we still have to keep a slight eye on that, but it's right at the 38.2% fib level. It's a good level to bounce from. We're back above all the major moving averages. The one thing here, as I've mentioned in the past, is that 1030 never crossed for very long here. We had just a real short bearish cross and then immediately came right back. So a little whipsawing right there, but then we've been able to hold that 10-day moving average above the 30-day, and we'll see if we can break above this wave 3. Once again, starting to get a little separation from the 10-day moving average, so let's let this calm down just a bit. So maybe a little bit of sideways movement to start the week would be good on all the markets. let that 10-day moving average catch up, gather a little more energy and momentum, and then try to break these resistance levels. So we've seen resistance on the SPY, the DIA, and the IWM, or excuse me, on the Qs. Now let's go to the IWM, and that's the one that has a completely different pattern. And I would argue it's the one market that has been more in tune with how the bond market is active. We've covered in the past why small caps are rate sensitive. You can go back and watch some of the previous recordings if you want to learn more about that. But what ends up happening here is the small caps move quite a bit with what happens in rates. So as rates went up, we came down on the IWM, setting this wave forward just barely to where it's still qualified above that 78.6% fib level and bounce. And now when we're in this trading range here, it's a tight range between 220 and 230 on the IWM, the midpoint here being 225. Again, that was resistance back in the fall, and we've kind of traded through that level here as we've been bouncing back between 220 and 230. It's going to need the bond market, I think, to maybe show rates backing off a little bit, not just going sideways, because again, you saw that chart on the TLT where the 20-year was kind of bouncing around like this, and this is exactly what the IWM is doing. So that, just compare those two charts, and it shows how in tune the IWM is with what's going on with rates. So we're going to need a breakdown in rates, I think, for the IWM to break up. And look, the 10, 30, and 50-day moving averages are all in the exact same spot here, right in the middle in the 225 area. So I think you just wait, you be patient on the IWM. If we break above 230, you go long. We break below 220, you go short. But while we're in this range, you just kind of watch and see and let it tell us where things are going to go from here. Let's move over to energy. We'll take a look at the UNG. And when we look at UNG, finally, after so long, we have a tradable pattern here on natural gas. It's been a while. We've been watching it. Patterns have set up and failed. And now we've got a pretty well constructed 5-wave pattern to the upside here on UNG with the wave 4 right around 50%. We're moving up once again, a little extended from the 10-day moving average. So maybe you need a pause here at the beginning of next week as well in natural gas. But if we can take out that wave 3, then I think we're good to go up here to this wave 5 in the middle of the tap box, just around 22 or so. So we could have a nice trade to continue up in UNG. It's the most well-formed pattern that we've had in quite some time. Natural gas going back, we had this little zigzag pattern that completed here in the fall. And then since then, we started up, came back down. That wasn't a zigzag. It wasn't qualified. The correction was too far. But now we've set up in a pretty well-formed 5-wave pattern. So that's good to see. Staying in the energy sector, and we'll go over to oil with USO. And that's been constructive for the equities markets as well. You can see we're back in this trading range. I've talked about this. We went a little further than I thought we would on the breakout of the triangle. I did think that we'd likely stay in this range here between 65 and 80. And that seems to be a sweet spot from what I hear from drillers. They like oil to be above $60. OPEC wants it up there too, but then they want to be careful not to let the price go too high to where it affects demand. So far, it hasn't affected demand. We set a record for cars on the road this year, so or in 2024, and we're on pace already to break that this year with the start to the year. So keeping oil elevated in price, but not getting too far to the upside to where, again, it quells demand. And then, obviously, I don't think they're going to let it go too far to the downside. I know President Trump with the drill, baby, drill wants to bring oil prices down, but OPEC's come out and basically said exactly what I've been saying for a while. Go ahead, drill, baby, drill. They even use those words. And all we're going to do is cut production to match whatever the U.S. increases domestically. So I think that keeps us in a range here on oil. It's a big range, but I do think that that's kind of where we're going to be. The wave 4 here, we have to watch that, though, right at the 61.8% level, the strongest of all fib levels, in my opinion. It's trying to hold here. It'll need to, but to me, to get a confirmed wave 5 here, we got to break above 80. So I would want to see a continued move up and break above 80 there. I think we're still in danger of moving down further here and violating this pattern if we break below where this wave 4 is. So a little bit of line in the sand type of stuff here. We need to bounce if we're going to on USO. If we don't, Again, I think it just plays into the big trading range scenario throughout, at least for the next several months. I'd like to invite you to join us for the Profit Dynamics class, where I'm going to take a deep dive into Elliott Wave, AI, selecting proper options, creating strategies, etc. It's a great course whether you're looking for technical analysis or options analysis. It's a deep dive into all those subjects. It's 2 classes. Each one's 90 minutes long. It'll be recorded. You'll have access to the recordings in perpetuity. So you can sign up on the link underneath this recording. Love to have you join us. The classes are going to be on February 17th and 25th. They'll be at 8 p.m. Eastern Time. Again, a good comprehensive class on technical trading, using AI signals, and selecting proper options. And if you're not understanding the Greeks, that class is for you as well. So love to have you join us for the Profit Dynamics class coming up February 17th. So let's move into the metals. So we'll start with gold, GLD. And it just had one heck of a run. We did have a nice strangle in the volatility portfolio at ewotrader.com for GLD. May have gone out just a little bit early, but today looks pretty good with this move back down. Once again, we got a little separation from the 10-day moving average. You've heard me say it in ad nauseum. No security in any time frame gets too far from the 10-day moving average. And I just want to be clear, stocks can get overbought and oversold, but only for short periods of time, not for long periods of time. We're going to get back to that 10-day moving average, whether or not the security goes sideways and allows the 10-day moving average to catch up or down, depending on whether it's an upward move or a downward move, or it goes sideways and allows the 10-day moving average to catch up, or in the case of GLD, a combination of the two. So we consolidated and we've come back down. So those are the 3 ways that we get back to the 10-day moving average. We look at SLV. SLV is still lagging behind GLD, although you can see this big move here. We're trying to play catch up, but it couldn't hold it. It opened and then sold off. And so we are back down near the 10-day moving average on the open. You could argue that we were getting a little separated. But this isn't what you want to see when you're trying to break a resistance level, which we are right here around this 29 area that was resistance back in the fall and early winter. And we broke up, came back down, and now we have a 5-wave pattern to the downside in SLV. But if GLD is going to hold up, you would think that we're going to break that 78.6% level, which would render this 5-wave pattern to the downside disqualified. Technically, it's still qualified, and the fact that we couldn't hold the breakout move. This is what I was talking about before. See how this consolidation is here, right underneath resistance? That's exactly what you want to see in the SPY, the Qs, etc., that I've just shown you. If you want to see a breakout hold, and even with that, it didn't hold here on SLV. So we'll wait and see if we just the little engine that tried or could or what, but if we can turn around and give that another go. But there could be a trade here in SLV as it tries to play catch up to GLD. Again, likely disqualifying this 5-wave pattern to the downside. But pretty interesting that silver is not performed quite up to snuff, if you will, with what GLD has been doing. Now let's move into the crypto world. We look at Bitcoin. And we take a look here and look at this triangle that we're forming here in Bitcoin. It's been a great consolidation right around this 95 to 100,000 corridor here. You can see fairly tight range for Bitcoin, but consolidating nicely the big run where it basically doubled in price following the election night. And then we're in a bit of a symmetrical triangle here. The moving averages all converging here towards the point. Something's getting ready to happen with Bitcoin. Obviously, you would think it's going to break to the upside, but who knows? We'll have to wait and see if Trump does come out and they do buy Bitcoin for the strategic reserves. He's got a committee studying that now, et cetera. I don't think they're going to tell us ahead of time. Why would they? We won't hear about it till after they've already bought it. But we could also break to the downside. And even though there's a 5-wave pattern that completed here, we move into a symmetrical triangle. Again, classic Elliott Wave stuff here. Pattern finishes, you go into a corrective phase. We've seen the zigzags. Here's a triangle following it. So we're going to get a breakout and a new impulsive move here in Bitcoin. It's just we don't know which way. Anytime you have a triangle, it can break either direction. So we're just going to have to wait and see which way it goes. But the longer it stays here in this range of between 95 and 100,000, you would have to think lends towards an upside breakout. but you don't pick. One thing you're going to learn is that triangles break either direction, so you don't try to pick one. Looking at Ethereum here, we actually talked about Ethereum over on the Hub Financial Crypto Show. So here on YouTube, if you haven't gone over to the Hub Financial channel, you can go over there. We do a crypto show almost every week. We talk about all things crypto, and we featured Ethereum in this week's recording. So go over there and subscribe, and you'll be notified every time we post a video over there. And so with Ethereum, just doing its own thing, not moving along with Bitcoin at all. If you saw Eric Trump's tweet, could be a buying opportunity. Thank me later. Everybody's seen that. So far, it hasn't done anything to the stock price. But does he know something we don't know? Is he saying something he shouldn't say? I guess we'll all find out. But for now, nothing has really happened with Ethereum. But it is holding in there pretty well at 2,700. And so we'll see if we can break back up. I think to get excited about Ethereum, we got to get back above the 50-day moving average and back above 3,000. Then you can start to talk a little bit more about it. If we take a look at XRP, favorite of the meme crowd, trying to break out, trying to make a move here, as you can see. With the wave 4, I hate the one-day wave 4s. I don't like that pattern. Doesn't set up as well, I don't think. But nice consolidation around 2.5. And then breaking to the upside here today. Looks like we're headed back to the point of the triangle breakout. That's what happens with triangles. If you've been around, you've heard me say it numerous times. That's one of the rules. Following the breakout, you move back to the point of the breakout. Sometimes it happens rather quick. Sometimes it takes a while, but normally that's where you go. It looks like that's where we're headed, back to $3, and then we'll see what happens from there. But we did have the downside breakout. I mentioned that this was my favorite breakout pattern. Looks like a golf flag to me. We have the vertical move and then the symmetrical triangle. I remember the days when flags on pins on the greens were triangles. Now they're all rectangles, but that's what it reminds me of. So I call it the golf flag pattern. It's my favorite of all breakout patterns, and it worked out really well here with XRP. We've added in Solana instead of Cardano because a lot more people are asking about that. And it's just kind of consolidating here. You can see it's forming its own triangle pattern here. But I think we need to extend this triangle out. It's not the greatest of all triangles, but it's not bad either. It's not that large. But we could see some sort of a breakout move here on Solana as well. So you can see here, we finished the wave 5. We came back to the previous 4 here. We did that in early February, and now we're consolidating. Again, just all this very classic stuff. You can make an argument this is an upside down golf flag pin here where we had a fairly vertical move down and still the symmetrical triangle. So we're going to get a breakout in Solana as well. So we're going to see some movement here in crypto land in the not too distant future. Just don't know which direction they're going to go. So you can make your guesses, but that's all it is. Understand that when you have a triangle, if you pick a direction, you're guessing. The triangle rules tell you to go either way. So we'll wait and see which way they play out. I thought I'd throw the dollar in because it's being a little helpful as well. If you remember, I was getting a little concerned that the dollar was getting too strong. We did get a few companies, Amazon, the most recent one that we're talking about, how the exchange rate had affected their bottom line. I thought we might hear more of it. Only heard it about from a handful of companies. So I think we'll hear more about that unless the dollar starts to tank back down rather quickly when the next quarterly earnings cycle comes around. And they've caught all of this upward move in the dollar. You're going to hear a lot more companies talking about how the exchange rate hurt the bottom line. It goes right to margins, et cetera. But we peaked right in the middle of the tap box. We tested it again here in the beginning of February, and now we've headed back down. I think this is constructive for equities as well. I like to see the dollar get back down around 104. So I'd like to see it continue lower. And it should come down at least to where this previous 4 was, again, following Elliott Wave rules. So we get back down to there. It's around 105. I'd like to see it break that and go even lower. But at least we should see a movement in the dollar back to 105. And again, helpful to equities when we get to the next earnings cycle. Maybe it'll take some of the sting out of what they felt over this past quarter. As they've been doing international business. Most companies are international now. I did want to show you It wasn't on the list, but I wanted to show you T-Mobile. This is one that we did in TradeFinder this week. This was our case study consideration for TradeFinder. And if by chance you haven't signed up for TradeFinder yet, you can do it with the link you see on your screen. Go to it, sign up. We do it every Tuesday at 1 p.m. Eastern time. So it's during market hours. We talk the market, we look for trade ideas, and we have a live Q&A. It's a great community. Ask great questions. They interact back and forth. Love to have you become a part of that. Every Tuesday at 1 p.m. Eastern time. So register. So again, I said we look for trades. We give out a case study consideration every week. This week we did T-Mobile, and it's rocketed to the upside. So people have been posting comments about how that was such a great trade. We like it when they move quickly like this. And just another note, on the software, I've talked about the software a lot. And if you want to go over to hub.com, HUBB.com, and get a copy of the software, you can get Elliott Wave and intraday Elliott Wave for free. But there's also an opportunity to subscribe for the AI signals. And where I got this case study consideration for this week in TradeFinder was from the AI signal. You can see that the score was only 74. We like to have scores of 75 or above, but this was sent out as an alert to our alert subscribers at ewotrader.com. Based on this AI signal, even though it was only 74%, that's why it's gray and not green. It's 75 or above. That's what we usually look for to send out alerts. But look how well it worked anyway. Even though it was a tick lower than what we wanted on the numbers, it still was a great trade. You can see that arrow there shows you that's when the AI identified it and what's happened since then. So a really great short-term trade there on T-Mobile. So yeah, join us this next week on TradeFinder. Love to have you. Continuing with stocks of interest, we're going to move over to Apple. And while I'm talking about stocks of interest, just as a quick reminder, just like we did last year, every month this year, we're going to be giving away one of our free level 3 subscriptions. That includes our time strategy, which is our sideways-based strategy. We look for income type strategies like calendar spreads, butterflies, etc. It's not directionally based, it's sideways based. And we try to generate income from those. Then we have the volatility strategy, which is the triangle breakouts that I mentioned, and then the impulse strategy, which is fueled by AI, which is primarily zigzag patterns within a wave 3. And that was what we saw there on T-Mobile. So that gives you an idea of what we're looking for there. When you add it all up, you go to the website, you'll see it's worth thousands of dollars. We're going to give away one every month. And all you have to do to register is leave a comment underneath this video. You leave a comment and you're registered for the drawing. So good luck, everybody. And while I'm talking about that, hit that like button or hit subscribe. We're trying to do the push to 50,000 subscribers. Love to hit that milestone. Appreciate your help. Appreciate it a lot. And if you know anybody that you think may be interested in these videos or enjoy them, please recommend them. We'd appreciate that a lot. So taking a look at Apple, not in a 5-wave pattern here on Apple, but look at this breakout move. We came down, and I made a comment during some of the live shows that we do throughout the week that if Apple was going to hold, it needed to hold right here at 220. It bounced, and then we started to come back down. We broke below 230, and we're like, but then it's turned to move back to the upside. And now look, if we can hold this move today, which we have, the market's closed now. The break above the 1030 can get some follow through on Monday. Then we could be off at least to the previous highs there at 260 on Apple. It looks like a pretty strong breakout move. We do want to see that 1030 finish though, so we need that Monday confirmation. You look at the CCI, it's breaking above positive 100. It looks pretty well constructed there. The DMI is setting up. It looks like we might have something going on here in Apple. Perhaps we're a tiny bit overbought from the 10-day moving average here. So once again, maybe a little pause on Monday would be great. A little backing and filling occurring through all these markets at the beginning of the week would be good to look at. You guys all want to know about Palantir, so we'll look at that. It's continued higher. My disciplines just won't allow me to chase a move like that. That's too vertical. We got the vertical move out of T-Mobile, TMUS, but with this one already gapping up so far on earnings, it has continued to move to the upside. We're still overbought here from the 10-day moving average. It's getting a little vertical. It's too far away from a 45-degree angle, so I do think we'll get some backing and filling here on Palantir, but gosh, you have to be pretty impressed with this move above 110. I thought we might find some resistance right here around 110. Let that 10-day moving average catch up and then continue, because the algorithm is not sure that wave 3 is done. It's still the active wave. It's green, not purple. So again, that means it's currently active. So we could go higher on Palantir, but I really do think we need some backing and filling first. I'd love to see us come back down to 110, test that, let the 10-day moving average kind of move to the side just a little bit here, and have a little bit of sideways consolidation, gather energy and momentum again, and then take off. So it's tough for me to chase Palantir right now. It's been going up, but it's a bit overbought short term, and we'll see if it calms back down just a little bit. We haven't looked at SMCI in a little while, so I thought I would bring that one back up because it's starting to do something. We came down here, we held this 30 level. We've moved to the upside here. You can see that we have labeled a wave 3, but we are bumping up against some resistance now at 50. So that was a nice trade off 30 back up to 50. Good day today. And you'll see where we have resistance here. It was support back in August, and we broke below it at the end of August. And then September and October, November, December, it was all resistance. So we're probably going to bump our heads a little bit here at 50 plus. We're too far from the 10-day moving average. Again, you don't want to see SMCI, if you're bullish on the stock, break above 50. You don't want it to break above resistance when it's already overbought. They tend not to hold, and they come back down, and it's a failed breakout attempt. So we want to see this go sideways a bit for the first part of the week as well. Let that 10-day moving average catch up, and then perhaps try to break 50. And if we do, we might really have something going on SMCI, because you can see there isn't a whole lot of resistance in the way, going all the way back to 90, all the way back to those highs in last summer, if we can break above that 50 level. But let's not do it yet. Let's set up well here, consolidate just a bit, and then take a break and move. I did want to go back to Palantir for a minute, because I wanted to show you this on the confirming indicators. This is another thing that's creating a little bit of concern about Palantir. When you look at the DMI, you can see that's very constructive. If you know anything about the DMI, that looks pretty good. Separation between the two directional indicators, positive moving up, negative moving down, ADX moving up. That looks fantastic. But then when you go to the CCI, which is more of the shorter term indicator that I look at, again, these are just what I use to do confirmation on the Elliott Wave signals that the software produces. Notice that we've been moving down. So we have divergence here on the CCI. So we've had this big move up in Palantir. We're a bit overbought, as I mentioned. I do think backing and filling would be great. And then when you look at the CCI, it's telling you that, yeah, we're going up, but it's getting weaker and weaker on the move to the upside. So again, I do think Palantir is ripe for some sort of a short-term pullback, if nothing else. Looking at Tesla, we had that descending triangle, broke to the downside. We are holding at a pretty decent wave 4 level here, 55%. So between the 50 and 61.8% levels. If we're going to continue to bounce, that's a good level to bounce from. But I think we need to get back above, at least back above the support line, but specifically back to 400 or above. I think to get excited about going long Tesla again. We bumped the 10-day moving average on the high today. So all we did was correct getting a little bit oversold earlier in the week. So that doesn't really mean anything yet. It's just an oversold bounce. But if we can continue this wave 5, and again, I want to see us break above this support line from the descending triangle and break above 400, then I think you could feel a little more comfortable about being long Tesla. But for now, it's a little bit dicey with the fact that we haven't quite completed the entire move forecast from this descending triangle, which is where you measure the high and low in the mouth of the triangle, and then you move that up or down from the point, and that gives you your rough target about where it's going to break out. So we didn't quite break far enough, but if the wave 4 holds and we move back up, then the Elliott Wave pattern stays intact. But we need to see a little bit more work out of Tesla. NVDA also catching a little bit of a bid here, but just as I talked about before with SMCI maybe running into resistance at 50, we had the same thing going on here with NVIDIA right here at 140. You can see we had a nice move, still stayed qualified and confirmed on the wave 4 at 72%, above that 78.6% level. But the problem is we have resistance right here at 140, and what's going to happen once we fill this gap? We're almost there to fill the gap on NVIDIA, and then we have to watch that and see if we can continue higher. This does look pretty constructive, but we got to break above 140, finish that gap. We might get a little bit of resistance there when we close the gap. Perhaps the shorts will jump in a little bit on the short term, try to see if they can press things to the downside. But if the pattern holds, can move up. You can see the ADX is trying to turn. The ADX is a lagging indicator. It's like turning an aircraft carrier in the ocean. It moves slower, but the two directional indicators have made a separation there, positive moving up. So there's some potential there for NVIDIA to continue higher, but we got to see it back above 140 first. Then I wanted to show you the INDA, finish things up this week. We talked about this zigzag to the downside. Again, another very classic Elliott Wave pattern. So, if you're not trading Elliott Wave, I don't know what you're waiting on. We show week in and week out how well it works with this big zigzag pattern with a B wave right at 50%. You're going to get 100% extension. We came down, we got almost to it and then bounced up. We hit a little bit of resistance there at around 51, and now we're back down. And you can see basically touching that 100% extension on the low. The wave 3 to the downside. Remember now, we had a wave 5 back over here. We talked about this before, that for a couple years, when the INDA was moving up, we kept getting wave 5s relabeled to a 3 on the way up. Now we've had that happen on the way down, where the 5 relabeled to a 3, but maybe this 100% extension is going to hold here, and that could be into the wave 3 to the downside. We got dually investment managers I've mentioned in the past. Some are saying it's time to leave India. Others are saying it's time to get in. So it's kind of a coin toss from the investment community on what to do with the INDA. But we prefer to trade technicals. And we'll see if we can hold this 100% extension. Thanks as always for your attention. Hope you have a wonderful weekend. Remember, Monday is a holiday, so no market on Monday. Enjoy your holiday weekend and look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.